Hello friends, I have a look of Robinhood 1Q 2022 results. It wasn't pretty, but not unexpected. Why is this the case? Robinhood's shares has already declined by around 88% from its IPO price of 38 USD even before the results for 1Q 2022 results are announced. Current market capitalizations after the results announcement is at 8.5 billion USD at a share price of 9.8 USD. This pricing still work out to around 7x price to sales, assuming this level of revenue is annualized for the rest of the year. Question to ask ourselves is, could this be the bottom in terms of the worst quarterly results for the year? This is really dependent on the general financial markets performance, be it equities, crypto, options, etc. The saving grace this quarter is that Robinhood has announced a 9% reduction in headcount, which should slow down the growth in operating expenses by 2 to 5% growth as compared to earlier forecast of 15 to 20% growth. The ability of Robinhood management to adapt to the changing market environment is important. The slowing MAU, despite a slight increase in net cumulative funds account, is not a good sign. This implies a 70% ratio of monthly active users compared to that of the net funded accounts number. With this, it's not unexpected for average revenue per user to decline from last time 90 over to 64 USD in 4Q 2021 and to 53 USD in 1Q 2022. I listened to the earnings call for 1Q and understand that for Robinhood to break even, it requires its average revenue per user to be around mid-80s. Is this difficult? Under a normal market environment, not like this one that has been declining since November 2021 for the US market, I believe that Robinhood should be able to break even in 2023 and 2024. But in terms of the skill and customer type, Robinhood customers funded account is a lot smaller than that of IBKR Interactive Brokers. A lot of Robinhood customers traded crypto and options, though it did see a substantial decline in option revenue, a result of lower option trading compared to 4Q 2021. It's a bit surprising when I look at Interactive Brokers option trading volume. Here, you see that for Interactive Broker, its option contract and futures contract volume remain largely unchanged compared to 4Q 2021. But if we notice that Interactive Brokers, their traders seem to be a lot more sophisticated and they traded futures, and the futures contract number is higher compared to 4Q 2021. All in all, Robinhood product mix is slightly more geared to the demands of younger users. This may well be where growth is coming from in the future going to the next 5 years. While Robinhood is still generating a negative adjusted EBITDA of more than 100 million USD in the latest quarter, to us, it actually pays to actually continue monitoring the results of Robinhood. Whether should one acquire a position in Robinhood right now is dependent on how one views the financial markets going for the rest of 2022. Robinhood is still trading at around 7 times price to sales, whereas IBKR price to sales is still around 9. So we actually see the relative valuation wise, Robinhood is slightly cheaper compared to Interactive Broker, but Interactive Broker has already shown profit. I will stay on the sideline for the time being and see if the product mix going forward will be able to attract more customers for Robinhood, and can Robinhood actually set a clear, strong differentiating factor as compared to its other competitors, because this industry is a very competitive industry and the only way to differentiate oneself is to be very innovative in terms of product mix. I will appreciate the viewers to subscribe to my YouTube channel if you like my content. As always, this should not be construed as any investment or trading advice. Thank you.